Ready?
Yeah.
What is capital?
Capital is the money that's put in the business to finance the beginning of the business.
What are assets?
Assets are things that we put in the business. They are either fixed or current. Current asset will be money in the bank or cash in hand. Fixed assets will be like buying a building in the name of the business, or cars that the business will use. Things that last longer.
Sorry, what is liability?
Liabilities are money we owe. So for example, if we get a mortgage on the property that we're going to use as the business, or if we borrow a car and then say we're going to pay it over some time, these are expenses that the business has. They are either expenses we're supposed to pay in the near future or expenses we'll pay later on.
What are purchases?
Purchases are goods that we buy or products that we buy from other consumers, from other businesses that we need to use for our business. For example, we need stationery, we need computers, we need food, we need phones, stuff like that.
What are sales?
Sales are services that we sell. They might be our time, they might be software, they might be physical things that we sell. For example, we might own a stationery company and we sell pens, we sell books, we sell ledgers, we sell rulers and stuff like that. It's what we sell.
What are purchases returns?
These are things that we have bought but are defective or that we do not intend to use, and then we return them to the people we bought them for in exchange for our money back or in exchange for something else.
What are sales returns?
Sales returns are things that we have sold to customers that are returned to the business because they're either defective or it was a wrong order or something of that sort. So these are things that come back that we had sold.
What is a transaction?
A transaction is twofold: when we exchange money for goods or money for services.
What are drawings?
Drawings are when we take out of the capital or out of the profits from the business for personal use.
Returns inwards.
Return inwards are things that get returned. This is the same as purchases returns.
What are return outward?
Return outwards are the same as sales returns. These are things that we return because of any of the reasons that I mentioned earlier.
What is petty cash?
Petty cash is a system where there's always a little bit of money in hand, which is cash, for day-to-day transactions. For example, fuel and bus fare, probably food for workers and stuff like that.
What is balancing of accounts?
Balancing off of accounts is a process that's done at the end of the period. It might be the end of the month or the end of the quarter. Basically, it's a system where we close the accounts so that we can check if we made a profit or a loss by carrying forward or carrying down the balance.
What is the trial balance?
A trial balance is a system of checking for errors. So basically we list all the balances, and then at the end of it, the balance on the credit has to match the balance on the debit side because of the double entry system.
What is bank reconciliation?
Bank reconciliation is when the amount the bank has differs from the amount on the bank aspects in the cash book or cash ledger differs, so it's because of some inconsistencies that we have to look into.
What is trading profit and loss?
The trading and profit and loss account is a system where we look at the income, the total income and the total expenses, and discover whether or not the business had a profit or a net loss.
What is a balance sheet?
A balance sheet is similar to the balance sheet. It's basically a way of checking if there was an error, where the double entry system would demand that both sides have the same amount, because for every debit there was a corresponding credit entry.
What are source documents?
Source documents are receipts and other correspondences between buyers and sellers that give evidence to transactions that have occurred, and they have distinctive invoice numbers that we use as references. So when we record transactions, we have a folio folder or card that we enter that reference number.
What is the golden rule of accounting?
Debit the receiver, credit the giver.
What is depreciation?
And depreciation is when fixed assets deteriorate in value because they have been used over a long period of time, or they have been in existence for a long time.
What is carriage inwards and outwards?
Carriage inwards is when we buy stuff from other people and then they offer to bring it to us for free, and it helps us save money from paying for transportation.
And carriage outwards?
Carriage outwards is when we offer our clients, if they purchase a certain amount of things, that we would pay for, or we would bring their items to them free of charge.
What is a suspense account?
A suspense account is an account where we shelve things or store differences in either of the trial balance or spreadsheet that have shown that there has been an error, and then we put the errors there, or if and only if we do not have time to go back and correct them. So a suspense account is created to sort of flag that there's a problem we need to get to, and we need to balance off our accounts because they're not balancing off, but it allows us to move forward.
What are bad debts?
Bad debts is when we have had a long-standing relationship with a customer and we have sold goods on credit, but they are no longer able to pay, or they have filed for bankruptcy, or they have delayed paying for a very long time, and we have decided to cancel the matter and not consider it as money that is going to come into the business. Consider it a loss.
What are control accounts?
Control accounts are accounts that may be kept in conjunction with the double entry system, that are just there to make sure there are no problems. They're just there as a means of double making sure. So it's more like a 4-entry system instead of a double entry system, because for every transaction with its corresponding transaction, there's another transaction being done somewhere else, just to make sure none of the errors that these other statements that we've talked about, including the trial balance, would have. Is that it?
No. What are income and expenditure accounts?
Income and expenditure accounts are books that we do at the end of the year, we basically put all the income, we calculate how much income we've had, and then we calculate all the expenses that we had, and then we decipher whether or not we had a profit or a loss at the end of the period.
What are departmental accounts?
Departmental accounts are basically the same double entry system books that we keep. The only difference is that each department keeps its own its own books. So when we have the accounts, they are classified by each department.
What are manufacturing accounts?
Manufacturing accounts are accounts where we try to decipher just how much we have used to manufacture something. So this involves some of the things that we don't ordinarily see in other businesses. It involves the raw materials, the cost of the raw materials plus the cost of the labor minus whatever of the raw materials is left in stock, and then add other costs like the cost of the space we were using, the cost of transporting the stuff to it, and then it's basically the total amount of money we have used to make the product.
What are partnership accounts?
Partnership accounts are when two or more people come together to open a company, and so they decide on how much they're putting in, how much they'll get in, whether or not there'll be people working in the company, whether they'll be salaried or not, and that will be a record of the business not owing them, the business either giving them back the capital, and also how they share the dividends after everything else has been done.
What are goodwill accounts?
Goodwill accounts are when either we incorporate a new investor or we have an investor leaving us, or the sharing proportions of the profit changes. So this is just a system of trying to make sure that we do that properly on the books as well. And this is a complete introduction to accounting for ordinary labor. Thank you. Bye.